morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, February 25th. Crazy day in the markets. Markets were relatively weak and quiet in the pre-market session. 9:30 opens up right out of the gate. Buying came in, pushed the indexes to new intraday highs. Dow Jones up 103, S&P up 11, Nasdaq up about almost 30 points. And this is all due. We had some bad economic data come out, and still the markets discounted it as basically we had weather related, and the markets continue to rip up. I personally think that it was the algorithms searching for some buy stops. Sure enough, pressed the markets higher, squeezed a lot of the remaining shorts in the marketplace, and there you have it. Now, I think we are continue to be extended. I think the markets are, to me, are still suspect. There's a lot of indicators and correlated assets and inversely correlated assets that are giving the wrong signal. Until then, that's what we need to do is really just take a step back. Not at this moment looking to put on a lot of risk until we really get a clear signal on which way this market wants to go. Obviously, right now, it looks like the market's going to continue to grind higher. But when you have something like that just comes out of the blue and just runs the market up on really no real reason other than the fact that stops are getting elected, shorts are getting squeezed. To me, I still think that we need to really take a good look at what's really happening around us, and obviously we want to be patient and let the trade setups come to you. All right. Well, today we have some housing data coming out today. We have the Case-Shiller home prices. We have also consumer confidence coming out at 10 o'clock, and then we have the Richmond Fed Manufacturing Index also coming out at 10 o'clock. It probably means nothing. It seems to be that bad news is good news for the markets again. It's crazy how one day it flip-flops to another, but remember, that's why you need to be resilient, we need to be nimble, and we need to react quickly of what the markets are telling us. So what I want to show you is a couple of indicators in some of the markets. I want to show you the emerging markets here. This is actually what sold off the markets several weeks back. As you can see, the emerging markets are not going anywhere. Despite that, we have U.S. equities moving higher. The emerging markets really didn't do too much of anything. So another sign here, just to be careful. Now, when I say there's warning signs throughout the markets, I'm not saying to go out and short the markets. I'm saying use caution, maybe reduce risk, and reduce your share size accordingly to your trading account, only because we don't want to be caught by surprise. And that's what the markets are made to do. The markets are made to fool the masses. So I just want, and I've repeated that many times, but I just want you to be aware of that. Emerging markets, EEM, ETF, as you can see here, not much of anything. Now, when you go into the VIX, VIX is expected to move lower, and to me, maybe we look to come to an area back down to this this heavy support area of 12 and a half here, and that's where it looks like it's headed. So keep an eye on the VIX. Not really doing too much. I thought the VIX would have been lower, much lower than where the market was, where the market traded yesterday. Dollar continues to find a little weakness. That's going to bode well for commodities, precious metals and oil, grains as well. So if you do trade that, keep an eye on the U.S. dollar. Now the tick, the end of day tick, not the intraday tick, actually closed lower today. So again, just another little sign. Not too much to get excited about. You want to see the tick lower and continue to stay below zero. That gives you a lot of sign of weakness in the markets. Right now, it just closed below zero, but it's just interesting why would something like that close lower if you had just a real good market. I think, and again, guys, I looked at a lot of stocks, probably hundreds of stocks intraday, and not much was moving except the index itself. So you should remember that, right? Just kind of use a little caution here. I wouldn't get too overly excited about the markets. Now, here's the biggest reason is the yen. The Japanese yen, as you can see, broke bearish symmetry. All right, now we're doing a series of higher highs and higher lows. We have bullish symmetry now, and now we have this symmetrical triangle here. Which way this breaks, no one knows. But if I were to guess, I would say up, since we are in an uptrend right now. Now, we could easily break lower, but I want to wait to see this. If the yen breaks lower and continues its move lower, then there's nothing to say other than that equities will continue its trek higher. However, this is where you have to use caution because anything could happen. There's no reason to be putting on more positions, adding to your long trades at these lofty levels. Remember, we have a V-shaped bottom here, and this is I wouldn't say a bottom like we had in 2009, but I'm just saying, just now off the last couple of weeks, the markets have V-shaped to the upside. That is unsustainable. Eventually, it does market. Eventually, it does come down again. So, again, just a word of caution. Here is the weekly, excuse me, the daily S&P ES. As you can see here, markets are down about 4.5 points. Not a big deal. Just could change right on the opening, but just want to let you know we do have a little bit of overnight weakness. But again, nothing to write home about. As you can see here, we're elevated RSI, stochastics, and volume was basically normal. If you could see, we're above the 50 on the volume average here, and as you can see here, really not much of anything. Like, this is what you'd like to see, but this was all distribution. So again, as on the way up, we have lesser volume. On the way down, distribution, not what you'd like to see. But again, you still can trade alongside here. But this is where I would use caution. So we did hit a new high, an intraday high in the ES at 1856.75. Okay, the target's going to be right now for the upside is about 1875 here. So that's going to be really where the target is. And let's just kind of do a high to low here. Take a look at the extensions. Well, 1879. If you take, let's just get some of this out of the way. It's not doing it for us. Okay, I wanted to get some of these lines out for you. Okay, here we go. Okay. All right, so 18 right here, the 1272 extension, 1879 looks like somewhere around that area is where we would look for a failure in the marketplace. There's going to be new extensions, 1879, 1875 to 1879 would be somewhere where we would be looking for some sort of a target. Here's the hourly chart. As you can see, that now keep an eye on that 200 period here on the hourly. As you can see, that definitely held this downward movement in price the last week. So this is still going to be a viable area where we would look for some sort of a pause if the markets were to roll over. And as you can see here, it coincides nicely with this little pivotal low here from the other day, and that's perfectly right around 1830. So 1830 would be basically your next downside target. To the downside, 1879 would be your upside target in the E-mini S&P. Now, again, this is where it continues to really, when I say the market's is suspect here, is because you got the S&P moving up, and I keep showing this to you, gold moving higher, and bonds not selling off. Now, to me, it's a big surprise why bonds did not sell off at all yesterday. Now, bonds could be reacting, and I mentioned this yesterday, we could see bonds move lower as we feel, as a lot of the market participants think the markets go higher, so they take money out of bonds and they put it back into the U.S. equities. So that could happen, and it could be a delayed reaction. But right now, until that does happen, I'm going to use caution here in the markets. Spiders, as you can see, we hit this upper end of the long-term uptrend line from the November 2012 lows. So again, we are right at this area here, and markets weren't really doing anything wrong by holding at the upper end of the range, but we had really a consolidation week last week, and now we're starting to kind of trying to break back out of it. But we're down now about 4.5 handles, so let's see if we continue to at least have an inside day or an outside day. I think this week is going to be very interesting. But remember, guys, you have end of month mutual fund inflows, so I don't think the market's going to go anywhere too soon. At least not until we start to break out sometime next week. All right, let's just take a look at IYT. The transports woke up a little bit, but again, I want to see this lead, not lag the other indices. S&P 500, get rid of that. Get rid of that, okay. Weekly chart S&P, again, just want to show you that we are making higher highs and higher lows. Nothing wrong with that at all. So right now, the longer-term picture of equities looks great. If we could just get a little bit of a pullback, a 10% pullback, I think the markets would behave really well, and we can really start to dive into some long trades, some good long trades. There's a lot of ideas, by the way, that are setting up perfectly going into the early spring, early summer, that March, April, and May. So we've got a lot of good trades happening here, and it would be great to see the market get a little bit of weakness here to get some of these ideas a little cheaper. IWMs again finally broke back above inside that bearish rising wedge. So now let's see where this market goes here, guys. So now it's really up to the markets to say, all right, is this for real or are we headed back down again? But you get that V-shaped here. That's what makes me nervous. We're up about 14 out of 16 days. I mean, to me, that's a bit of a stretch. Q's doing fantastic. Some of the bigger cap tech doing well. And then we have diamonds here. Diamonds, as you can see, one of the laggards. They are the laggards of the 5 indices that we follow. But again, I'd like to see all of them in one, everything firing all in one cylinders here. GLD, as you can see from yesterday, I mentioned we did now break above the 200-day moving average. I would not chase gold. I would not chase precious metals and or crude oil because to me it's extended. If you're not in it already, you missed the trade. Wait for a decent pullback and look to get in again. Okay, but I would not be looking to get gold. Here's the XOP. As you remember, I was showing this to you guys right in this area here. This is the oil and gas exploration ETF, and now it's showing its true colors, right? So what you could be doing and should be doing now is looking for a pullback, which obviously if we can get back into this 50-day moving average, look for stocks in the XOP, in the ETF, scan a list of ETFs actually, and look for the top 2 to 3 longs and or shorts if you're looking for short in that ETF. So XOP, nice volume breakout confirming. So now what we want to do is pay attention to the oil and gas exploration. This is the a very good ETF. And I also mentioned to you about XLE. Said even though this broke out of the bearish rising wedge, as you can see here, I would not personally be looking to get short the index, this index. I want to be looking for long trades. Why? Because oil and gas stocks, not the natural gas now, oil and gas stocks bode well up until about May. They have seasonal strength until May. So look for pullbacks in these names and you will get rewarded. And that's what I would be doing, looking for pullbacks. Even day trades right now will not be holding anything long unless you're doing a put strategy, selling put credit spreads or call credit spreads, because then at least you got probability, a little bit better probability on your side. USO, as you can see, holding up well, but again, let it come back down, see if we can get back down to the 200-day moving average in USO. Home construction, now again, it will affect. Remember, we had home builders confidence was at a 9-month low last week, but that didn't matter because as you can see, they bid up this sector, the home construction. Take a look at the ITB. And I'd be looking at any top 3 names. Take a look at them. And the XHB, as you can see, same thing here. Look for pullbacks. I like to see market weakness here. I'm not looking to chase any of these because if the markets do move lower, the first thing that's going to move lower are going to be banks and builders, and of course some of the higher beta names. But Lennar, one of my favorites. I'm looking for, like to see maybe if it get back down to that $39, $39.50. You know, ideally a gift would be the 50-day moving average. And then you have Pulte Homes looking fantastic. Again, if we can get back to the 50, I'd be looking to be, I'm a buyer on any dip here in Pulte Homes, KBH, and Lennar. Now, XLF, XLF didn't do too bad. And let me tell you, take a look at Citibank. Citibank did really well yesterday for the first time in many, many weeks, as you can see here. Now, to really get going, we need to get above 50. That would be the 50-day moving average, and we need to get above 50, consolidate a little bit, and then move higher. Watch Citibank here. This could be a one-hit wonder today. Yesterday's price action volume was okay. It's still kind of low, but we want to see volume really start to pick up in these names as a whole before we get crazy involved in the banks. Okay. Now remember, if the market is weak, so will the banks. And here's Apple. Apple barely held the 20-day moving average on a daily chart. So still needs a lot of work here, as you can see. Stochastics rolling over. MACD's now lower, making low lows, low highs on the histograms. Very low volume. So to me, well, this could be, this could be here your classic bull flag, and it does look like it, and it actually is a bull flag. So bullish only if it breaks out of this bull flag area. Here's your flagpole. So let's keep an eye on that. If it does break out of it and it takes out 535, let's say, definitely for a trade, I definitely get involved. All right, that's really about it, guys. Really, now is the time of patience. We need to be patient. We need to see where this market is truly headed. You know, one day out of the blue. And I think it's all algorithm price action. I'm telling you, I looked at watching it, seeing it, and a lot of good quality stocks that were supposed to be moving really didn't do too much yesterday. So that's why I'm holding the market as suspect. But it doesn't mean that I'm not going to be taking any long trades because we are trend traders and we do trade the trend. Unless you're trading relative weakness, stocks that have maybe sold off, a bad earnings announcement, earnings guidance, or a downgrade. More than likely that stock will probably not care that the market is up. So that's something a little different. But just keep that in mind, okay? All right, guys, have a great day, and we shall speak to you tomorrow.